Hi, this is Kelly Wright at the Money Show, and I'm with Thomas Grimes of Reaves Asset Management. Good to see you, my friend.
Good to see you, Kelly.
So, weird thing is starting to happen. Interest rates are starting to go up.
Yes, they are.
Nobody asked our permission. All right, no, seriously. All right, so you guys are in the utility business. You got a great utility ETF, Utes.
Yes.
A lot of folks are worried about what's going to happen with with dividends, with payouts, and so let's talk about that.
Sure. Well, Kelly, as you know, Reaves has been following utilities for the last 40 plus years.
There you go.
So we've got a long track record in the sector.
Right.
And we've seen a lot of different economic environments and a lot of different interest rate environments.
Okay.
And the one thing we've always done that differentiates us from others who invest in this space is we've emphasized investing in the utilities with the fastest rate of growth. So we want to see good earnings growth, because good earnings growth leads to good dividend growth.
Right.
And I know you believe in dividend investing and dividend growers, and there's no reason you can't apply that same philosophy to the utility sector.
Okay.
Too many people link utilities to bonds, and they say rates are going up, sell your utilities, sell your interest-sensitive stocks. Well, many utilities, and today more than ever, utilities fundamentally are in the best shape they've been in many decades.
So let's talk about that.
Sure.
When you say they're in the best shape, let's talk about what that means.
When I say utilities are in good shape, it means number one, their balance sheets are solid.
Okay. They're clean?
Good mix of debt and equity.
Okay.
The payout ratios are not too high.
Okay.
They're probably at or below historical averages in payout ratios. And when your payout ratio is lower, you have more room for future dividend increases.
Okay.
And finally, most importantly, the regulatory environment in many states is very positive. Regulators have begun to recognize how important the local utility company is. It's a big employer,
right.
It's a big taxpayer,
right.
And it provides the most essential service for the economy. Without power, I live in New Jersey. We have lost power many times in the last 5 years.
You've had a few storms whip through there, haven't you?
It stops everything.
Right.
The folks in Florida and other storm-prone places are aware of that.
Right.
Okay. The utilities have invested money with the regulator's blessing, and they've been allowed to earn a return on all this money they've invested. And they have to continue to invest in the future as they move towards wind and solar and cleaner fuel sources. Okay. So we're seeing in many states a much better regulatory environment, which means the utilities have more headroom to grow their earnings. There's better visibility on future earnings growth than there's been in a long time.
See, I think this is a real important subject and a real important part of this discussion. Because you mentioned early on, you said growth. Usually when we talk about utilities, everybody's mind immediately talks to, okay, this is strictly an income vehicle.
Yes.
They don't understand that, no, utilities can grow, okay? And they have to grow, okay? And now we've got an environment where, like you said, regulatory-wise, the regulators are allowing that to grow. I think it's a really super important part.
And that growth overcomes, so if you go back to December 2015, rates, the Fed funds was at 0 to 1/4, we're now at 1 3/4. We've had 6 rate increases. Utilities are up over 30% during that time period, which is very counterintuitive to people.
It doesn't,
and it's because their earnings are growing, their dividends are growing, and really we were at artificially low rates
for a long time.
And we're just trying to move them back to more normal levels.
I know.
In 2003 to 2006, a 3-year period, the Fed raised interest rates 17 times from June 03 to June 06, and utilities went up over 60% during that period.
I remember that
Outperformed the S&P 500. So there is not a direct linkage between rising rates and it happens in the short term. It's the fear that rates are about to go up, and all the prognosticators on TV and the pundits say dump your utilities, and you get some short-term sell-off, but it always creates a buying opportunity.
In our next segment, we're going to talk about sentiment. We're going to talk about being emotional, etc. I'm with Thomas Grimes of Reaves Asset Management. I'm Kelly Wright at the Money Show. Thanks.
Thank you, Kelly.